Welcome back to our channel, where we explore investment opportunities. In this video, we're focusing on the biggest Singapore index funds. These mutual funds track specific indices in Singapore, offering a way to invest in the market with a passive strategy. Let's look at some of the most notable ones. What are index funds? To start, let's clarify what index funds are. Definition: index funds are mutual funds designed to track the performance of a market index, providing broad market exposure with low management fees. Benefits: they offer diversification, lower costs compared to actively managed funds, and a passive investment approach, aiming to match rather than beat the market performance. 1 Infinity U.S. 500 Stock Index Fund. Overview. Managed by Lion Global Investors in partnership with Vanguard, this fund feeds into the Vanguard U.S. 500 Stock Index Fund, offering Singaporean investors exposure to the S&P 500. Why it's big. Access to the U.S. market. This allows Singapore investors to invest in one of the world's largest economies through CPF or SRS. Low cost. Known for its low expense ratio, it attracts cost-conscious investors. 2 Infinity Global Stock Index Fund. Overview. Another collaboration between Lion Global Investors and Vanguard, this fund tracks the MSCI World Index, giving investors broad exposure to global equities. Why it's big. Global diversification. It's a one-stop solution for investors wanting global exposure without picking individual stocks or funds. Cost-effective, like its US counterpart, it's known for its competitive expense ratio. 3 DBS Enhanced I Yield. Overview. While not strictly an index fund, it's worth mentioning due to its passive strategy. It invests in a diversified portfolio of Singapore government and corporate bonds, aiming to match the performance of fixed income indices. Why it's big. Fixed income exposure. This option offers a way to invest in the bond market with an index-like approach, focusing on stability and income. 4 UOB United SGD Fund. Overview. This fund doesn't track a specific index, but operates with a passive strategy focusing on Singapore dollar-denominated securities, including government and corporate bonds. Why it's big. Local market focus. This fund provides exposure to local fixed income markets, operating similarly to an index fund. 5 OCBC Balanced Growth Fund. Overview. While traditionally a balanced fund, it has elements of passive investing. By aligning closely with a mix of equity and bond indices, it's managed by OCBC Asset Management to provide a balanced exposure to both stocks and bonds. Why it's big. Diversified portfolio. This portfolio offers a blend of local and global equities alongside local bonds, providing a balanced approach to index investing. Accessibility, available for investment through CPF, making it accessible to a broader range of investors in Singapore. How to invest in these funds? Brokerage or fund platform. You'll need to go through a financial institution or platform that offers these mutual funds like DBS, UOB, OCBC, or specific investment platforms. Consider your investment strategy. Regular investment. Some funds allow for regular savings plans which can benefit dollar cost averaging. Tax considerations. Understand how these investments are taxed, especially using CPF or SRS. Research. Check the fund's expense ratio, historical performance, and how closely it tracks its benchmark. Investing in Singapore's biggest index mutual funds can be a smart way to gain market exposure with a low-cost passive investment strategy. These funds provide access to local and international markets, catering to different investor needs, whether you're looking for US stock market exposure, global diversification, or local fixed income opportunities. Thanks for watching. If this video helped you understand Singapore's biggest index mutual funds, don't forget to like, subscribe, and hit the bell icon for more investing insights. Drop your thoughts or questions in the comments below. Until next time, invest wisely.